Hey everybody, Boris speaking at Forex. Welcome to Weekly Technicals for December 3rd, December 7th, 2018. For the majors, for Euro dollar, dollar yen, and pound dollar, do or die for the dollar. That's kind of the theme next week because the dollar is at major breakout levels across most of the majors or breakdown levels against the dollar. But next week we have a huge amount of US data set that could sway the market one way or the other. Over the last couple of weeks, and certainly middle of this week, we've had this ongoing theme of essentially the market basically feeling that U.S. economy is starting to slow down materially. Peak growth was Q2, Q3 is slower, and the message this week from the Fed was that they are considering now perhaps slowing down their rate of increases. And the market really wasn't expecting that. So there was this major anti-dollar move middle of the week, and most of it got unwound. And next week, I think, is going to be a very interesting week because if we get positive U.S. data that contradicts a lot of the worry words that we have on the U.S. side, that could provide the kind of impetus we need to see to break some key levels. On the other hand, if we don't, those supports are very important, both technically and fundamentally. So for the euro, the levels now have really kind of moved down. The euro is really testing the lower end of its support level here with 1250, the absolute key hold if the euro bulls are to basically maintain their view that the currency is consolidating for a base, because a break at 1250 really opens up a move towards fresh lows in the euro. 1400 now is a very, very tough resistance. We tried it 3 times just last night alone and could not clear it. So for now, that remains to be the key hold for euro dollar bulls. Dollar yen got smacked back at the 1400, but what was interesting is that despite the very dovish Fed and the decline in U.S. yields, we didn't really break down much. We held the 13 very well. We came down to 1330 today. And for now, this 1314 is the key support level. Overall, the chart looks pretty constructive to the upside on dollar yen, and a breakout above 14 really opens up the run for a much longer, bigger move here. And cable, it's the same old story as last week. It's basically Brexit with 127 still the key Maginot line, keeping an eye on that level because that really is going to tell us whether whether the market gives up on UK or doesn't at this point. Now the calendar next week, as I said, is quite full. So we have a whole bunch of data out of the G3 universe. Let me just take a look at the numbers here. So we have, because I want to separate we have the ISM manufacturing on Monday, which is going to be very important. The Chicago PMI data was pretty good, and Kathy's pretty bullish this number, so that's it could be a positive for the dollar. Then going into Wednesday, we have ADP employment, which is going to be a big tell on where the market is at as far as non-farm payrolls on Friday. And then also, and this is going to be a really key tell, U.S. non-manufacturing index. This is the services component that has a very, very strong guidance towards where the employment number is. If the employment component of this is positive, that should be also very positive for the dollar as we go forward. Then into Thursday, it's a small day, and then finally, of course, a huge day on Friday with the U.S. non-farm payrolls coming in. The big question on the U.S. non-farm payrolls is going to be wages again. Wages we're looking for the wages to go 0.3 against 0.2. That would be okay, and certainly on an annual basis, that would be a 3% gain, which is not bad. But a truly bullish number would be somewhere around 0.4 and a break above the 3% handle, because that would suggest that maybe wages now are in a consistent 3% higher gain for the first time in a decade or more, and that really could put the Fed back on track of tightening. So a lot of stuff coming in this week as far as the data set goes, with the start of the week on the ISMs and then end of the week with non-farm payrolls. They can tell us a lot about how the U.S. economy is responding at this point. Now, looking at the charts, you can see right now the euro is just collapsing. It's just got crushed today after failing to break the 1400 for 2 days in a row. This was the Wednesday Powell move, and now it's essentially going to be almost reversed. By the way, what is it? The 1267. That's really sort of the 1267 is the lows of the euro from Wednesday's Powell move. This is when Powell came in with a dovish speech. If we take that out, that's really becomes the absolute key level against which the market is trading. If we kind of hold this right now and they staunch the bleeding, at this point the euro could consolidate a little bit. But again, watching this level technically, a break here below the lows of Powell really opens up a test of the 1200 period and then perhaps even fresh lows as the dollar just catches another wave of a bid and the market gets long one more time. So we'll see how that goes. Right now, technically, the picture looking much more constructive for the dollar than it does for the euro at this point. Cable holding on for dear life against the 27 here. There's also, of course, anti-dollar flows that are helping push it down, but still, cable performing much better than the euro. And the market for now still essentially entertaining the idea that Brexit will be some sort of a compromise. Although in the grander scheme of things at this point, there's so much pressure on cable that even a positive Brexit solution, I don't know how much more of a push it's going to get, especially if we get a strong dollar move, because there's been so much damage done in the UK economy already. It'll be interesting to see just how much of a relief rally there is. But certainly, a collapse below 27 just opens up a floodgates all the way down to 25 at very minimum, and perhaps all the way down to 120 if the market thinks that UK just spins out of control on the Brexit deal. And then last but not least, here's yen, and this is the interesting part. Surprisingly strong hold here, really just snaking its way around the 20 SMA, definitely making a higher low at this point. A truly bullish move would be a break above all these highs over here at around 1450. But for now, it's definitely much more of a buy than it is a sell. I certainly wouldn't want to short this thing at this point because it looks much more constructive than just a couple of days ago. So although it failed at the 1400, the fact that we caught bid right at the 20-period SMA suggests that the dollar buyers are still here in force. That's how the week shapes up, basically. It's going to be a U.S. economies to win or lose. If the numbers prove to be strong, all of these numbers, all of these levels could collapse next week as we go forward. Wish you guys the best of luck, the best trading. Boris, over and out.